day, all. Ira Epstein with your Spider ETF stock wrap-up. And this wrap-up is for the evening of Monday, the 29th of August, 2022. GME was up today. XLE was up today, some minors. Metal markets up a little bit. Rivian up a little bit more. But most markets, other than oil, which was up, most down today. Now, we're getting into that interesting part of the year, too. You know, what's the worst trading month historically for stock indices of the year? September. Average decline, about 0.6%. I went out on a limb, and if you were watching my stock indices wrap-ups on YouTube 2 weeks ago, maybe it was even just maybe a little longer than that, could have been right in that zone. And I said the combination of the 200-day average and the upper Bollinger Band should create a trading top in the stock indices. The only market that didn't get up to those numbers, didn't hit them, was the NASDAQ. The others did. Your Russell hit it, your Dow hit it, and the S&P. And the markets have fallen back. So I think I know where the trade top is now. I know the trade bottom was in June. We all know that as the market just rallied away. And the question now is, what does the market do? Often, when you come out of September, October, and December are fairly strong months for the stock market. Will they be offset this year by earnings that might slip on the companies? The question is, what happens to demand? Now, we have jobs data coming out this week. It comes out on Friday. The guesstimate's already in at 325,000 new jobs. That's behind the 528,000 shocker that we saw. Do they revise the 528 in any manner? I have no idea. The 325 is a guesstimate, obviously, and that would keep, and the guesstimate, unemployment at 3.5%. So there's no pain in the employment sector. What are people spending their money on? Well, obviously, a lot of it throughout the summer has been the service sector. Restaurants, dining out, going to hotels, things of that nature. And with the season change in America, a lot of that starts pulling in. You will see outdoor dining, New York City, Chicago, not out west so much, but in our big cities. Well, come the end of October, that's a game that it's rare that you do it. You know, on a bright sunny day, middle of the day, yes. Dinner, no, unless they've got it in some manner heated. That's just one of the factors. Automobiles. I don't know. This weekend I drove by some auto lots. Just wanted to see what they have. They're getting pretty full. Now, a lot of used cars are there. If they're getting used cars, they must be selling new cars with it. So something I'm looking at from that aspect too. So I wanted to change coming in today the stock. So I'm going to move to GameStop. I picked it because today's volume was one of the big ones that people were trading. Obviously the meme, I'll call them that, people on Reddit and all that, they came in and they bought this break today and they're getting an outside day to the upside. You have a pattern of a higher high and a lower low on the swing line. This has certainly been a vertical price decline and one that was relentless with every single day for a 2-week period making a lower low. The market's got a scale of resistance above it. You've got in green, the 100-day, in gray, the 200, the 50-day moving average, and then the 18. So all this all the way up there. So I can see that argument as to where the pros are going to say, okay, you buy it, but there's going to be resistance. And the market is trying to skid away from the lower Bollinger Band, but it is embedded. So to get this market having any real move to the upside, this red line's got to close over 21. Tomorrow, on a good rally, I think the pros will sell it into these guys, so we'll see what happens on that. AMC, it too has developed a bearish embedded reading, which tells me rallies, they're welcome. Something in the 15-11 zone, well, if you get up that high, you won't stay embedded. So it's somewhere between here and that number that I think the pros are going to sell this market short, looking to see what it's made of. I don't know that that's the smartest move right now. On Saturday, they're doing $3 show day across the country. AMC, Regal, Cineworld, everybody that's got a chain is $3 movie day on Saturday. It's not that there's any special movies out. Let me share this with you. There aren't. It's they're trying to get people and saying, come on into the movie theater, grab the experience if you didn't do it during the summer, see what it's like to smell the popcorn, to do all that. It's a gimmick, and it's a nice gimmick. Smart move. I'm sure they'll do big numbers with that. So this is probably not the ideal week. You're going to see better numbers, I would think, at the movie theater. Apple, all the way down to the 200-day average in the lower band. So finally, I can say this is where the market probably going to see the short covering. You're oversold. That could be it. But it punished people that stepped back in at 168.59 in this area, thinking, that break, that's the buy break. I think they got out at 166.25, and now you're down to 161.38, but you won to 159.82. I think that was a painful trade for people that buy and don't know how to use stops. Disney, I'm on the bear camp now, and I'm in the bear camp because all the theme park revenue is going to be cut. Not off, but going to be cut rather sharply. So are the costs, but the revenue is going to come down. Lower highs, lower lows. I think the pros want to sell it at 161.16 with stops over 118.38, looking to see how deep it can go. I think the next LF, you're too oversold here to be aggressive on the market. Could be headed, though, to 32.92. In the industrial sector, the XLI, I don't see a trend. I see a higher high, lower low, oversold, big support at 94.26. Support's covering. It doesn't mean it's a buy down there. There's areas, when I say support, first time you hit a Bollinger Band, you're typically covering short positions if you're a swing trader. I'm not talking day trader, in-out trader, and that's what I talk about here, these swing lines. I'm not Kramer. I'm not telling you to buy it and let's hold it for 6 months or a year. That isn't what I do in this. I do it on the weekend. That's when we look at the weekly charts. I don't think you can make heads or tails on a daily chart to do that. On the semiconductors, higher high, lower low. It hasn't been tradable in a while. This market's basically just been going sideways like this, and that's what it is still doing. The home builders got hit again, but now they're down to the 100-day average in the lower band. Now, they obviously got hit because anytime you're hearing the Fed get as aggressive as we heard on Friday, when the word inflation was mentioned, I think 45, 46 times, something like that. Paul Volcker mentioned twice, Bernanke mentioned, and I'm going to repeat it. This Fed chair has a legacy to leave. And the legacy is he can beat inflation back into the bottle. He doesn't want to go down in history as the man who blew it. And if you think I'm not serious about what I'm saying, shame on you. I am very serious, and I think that is what he's going to do. And I think that's why you only had an 8.5-minute speech, a big keynote speech, because he made his point and he left it in a way that maybe there was a couple words, as I pointed out, that I wish he wouldn't have said, because it'll give some people a little bit of ray of hope. There should be no ray of hope. This Fed chair, if he holds the sway vote, which he does always, they can say do this, and if he says no, I'm doing this, they're doing the way he says. That's how it works. He is going to beat this genie back in the bottom, which means higher interest rates, paying for markets that are interest rate sensitive. Energy is different. I think energy went up today because the market is concerned. Is Iran deal going to happen? I'm praying the market is saying no. That's why the market's going up. I don't think we should do any deal of any type with a terrorist government. It's that simple. They're going to build their nuclear bomb, whether you're in a treaty with them or not, because they're out and out liars. You can't go in and look at areas they have. They won't allow it. And because Europe needs this oil so bad, that is why the U.S. is being pressured. I get it. But understand, once they have this nuclear weapon, they do just what Putin did. Remember, he put his finger and he says, I have a nuclear weapon. He reminded us early on in the Ukraine situation, don't mess with me. Can you imagine Iran doing this in the Middle East? You have a whole new problem at that point. You got a problem with them now. Let them cheat with the oil. Go into no deal with them. GLD, lower highs, lower lows, under pressure from interest rate headwinds. hard to be wanting to buy that. GDX back to the lower band. So you came down to that band, you rallied back up to what I call the line in the sand, the 18-day average of closes in red, that's what this is, and right back down there. Not trending, just not tradable at this point. Copper got thrown back pretty hard today because all these interest rate increases from the U.S. and now we're going to hear from the European Central Bank. Theirs is coming up in September. And already all over the news, you're seeing the battle has begun. Do they go 50 or 75 basis points? And we will find out. I think if you get a 325,000 job number, even if inflation falls, I think we're going 75 basis points, the U.S. in September. If they're revised at 528,000 number way down and you don't hit that 325 and inflation falls, then I'm still stuck between 50 and 75. At least that's me. TLT, lower low, higher high, lost the embedded reading. I could make an argument to get back to the 18-day average of closes on this. I don't think it's a spot to be short, but look where you're at. You're in the 20 plus. Where's the Fed make its move? The short term up to the 2-year, but 1 year's all the way down. That's where the Fed is. They're not there. UUP, so the dollar's still very bullish. Embedded reading until the red line closes underneath 80. I think there's one way to look at the market, and that's with the scope of being bullish, and one way to be in the euro, the scope of being bearish, as long as you keep the embedded reading and the red number doesn't close over 21. So I'm looking for new sales tomorrow there, new buys in the dollar, sales in the pound, on rallies, on the sales, on breaks in the other if you can get those. And I think you play them accordingly. And that is the way to go. Now, one of the things I like to do with you is talk about what I offer. And I start in the morning at 5:30. I'm recording all about the futures, 40 charts. Buy here, sell there, do that. At 9 o'clock, I'm recording on the ETFs. I give the stock market 30 minutes before I want to record. Why? Algorithm traders, all the funds, let them get their money involved. They have things to do to balance their books up to start the day a certain way. Number two, the government reports. A slew of them come out at 9 o'clock typically. Some come out at 10, most are done by then. I want the benefit when I'm talking to you that we've gotten past the government reports. You already know what I'm thinking from the futures market. You tie that in because what do you think DIA is? QQQ, IWM, TLT. You're trading in the futures arena and this, but ETFs, many of them are based, what do you think? USO, they're based on crude. They're based on the futures. So get the advantage of seeing both. You can try a complimentary part to it. You can pay for a trial one. Go to our website at iraepstein.com under the word what? Research. That's where this is all explained. Follow my finger. There's also going to be a cursor up here. Follow that, give it a click. It'll take you right to the area. I'm Ira Epstein. You have yourself a great day. I will talk to you all tomorrow. Take care.